Hi and welcome back to Cheeky Crypto. My name is Nick, and today guys we're going to be jumping down into the world of Bitcoin, taking a look at what has been going on most recently with the price action and what I think is likely to happen next. As I get into this video, if you find it useful and informative, smash that like button. I do appreciate that. If you happen to be new to the channel, subscribe, tap the bell, select all the notifications, and you will not miss another video update. If you haven't yet joined us in Discord, guys, check out the link in the description down below. The Discord server is a fantastic community talking crypto 24/7. It's completely free, and it is the first place we go to notify you of everything that is going on in the crypto space. This video is going to be a brief update as to kind of the things that are going on. Obviously, if you're looking for more in depth, then check out the two slightly longer Bitcoin videos that I did over the weekend, kind of giving you a bit of an idea as to kind of, what I think is going on in a lot more detail than this particular video. This is going to be a brief update to kind of what I think is happening right now. So let's get on into it, right? Let's bring up the desktop here. Here we have Bitcoin paired up with USDT on the hourly chart, and Binance is our data source. We're going to start here, and then we'll probably just scale out at just a fraction so we can get an understanding as to kind of what is going on. The big kind of takeaways here on the smaller timeframes is they are looking a little bit more bullish on the smaller timeframes, but not so much on the macro larger timeframes. They're more bearish. So we want to be a little bit cautious because usually the macro overpowers these micro movements, and we tend to find that actually these things crumble down pretty quickly. So before we talk about the hourly, I do want to kind of just point out that on our daily DXY, we do actually have a green candle being printed here. And usually when we see green on the DXY, we see red in the crypto space. So just kind of bear that in mind. That actually what is going on right now is we're starting to see a little bit of red in the market as we have seen the DXY move down. If I pull the DXY down here into an hourly chart, you can kind of see that the DXY was going up. Whilst the DXY was going up, Bitcoin was coming down. Bitcoin's coming up right here at the moment, and the DXY is coming down just at a fraction here. Now, there is, of course, a little bit of volatility in here on the DXY that's probably worth noting. And the most notable part of this is the understanding that actually we might be seeing some kind of staleness within the price action of Bitcoin. And this will be driven from the fact that the DXY could go up, basically indicating that Bitcoin should go down. But if there's equal amounts of demand coming in, or a reasonably stable amount of demand coming in, we might see Bitcoin being just flat, just kind of trading sideways, or even potentially climbing up as the DXY climbs up. This can happen from time to time. It all depends on the amount of FOMO. I know at the moment there's a lot of retail FOMO, so I want to be a little bit cautious. Now, as I said, right, I do think there's bullishness to be said about the hourly chart. Most notably, if I grab a fib here, we can see and note that there is this structure to the upside potentially, and we can kind of see it coming up a little bit higher towards this area up here in a kind of ABC structure. So if I draw that in, we have this kind of A, B, and C structure like this, right, potentially. So this is kind of like, one of those things we ought to be aware of. There's a little bit of room to the upside, but on the flip of this, there's a lot of people going long on the market. When we looked at the data this morning in our Twitch stream, it was nearly 80%. I think it was 79.1% of people were leverage trading in a long position. That basically means there's a bigger pool of liquidity slightly further down in the price action, okay, where those people would get liquidated, or those long positions would get liquidated. And when you have a majority majorly swinging in one direction, the market tends to move against them. So although we have a wave count here that indicates a potential move up higher, we could also articulate this as already being complete, minimum expectations already being met just up here. So be really, really cautious at this point. I think there is, although there is a potential move up towards 21,557 to 21,774, this yellow box area here, as labeled up in the blue on the right hand side of the screen, that particular area is a nice to have. It's not a requirement. Okay, we've already met the minimum requirement here by peaking up a little bit higher. So be cautious. Now, as we spoke about on the Twitch stream this morning, we are not doing 5 waves down. That's an invalid count. This here actually looks like it's 3 waves coming down. 1, 2, and 3. We have not met the requirements to call that a 5-wave structure. Now, it can, of course, turn into a WXYXZ. That's a possibility, so we could potentially see it as a WXYX and Z. That's also cool, but, I'm not optimistic about that. With the amount of positions potentially looking to kind of get liquidated on a move to the downside, I would expect that that's kind of where things are going. But as I said, we're short-term bullish here because we have got momentum that has yet to shift to the upside. Now, I do want to point out we can be oversold for quite some time here. We don't have to move up to overbought area anytime soon, but the expectation is we probably will end up going up to this overbought area at some point in the very near future on the hourly chart. Okay, so let's actually just scale this up. We're going to take a look at the... Actually, you know what? Before we do that, I want to talk about the volume profiles here on the hourly chart. Okay, so within this kind of area here, we want to kind of understand that this peak here in price, and we've gone up into a higher high just here. The volumes, however, have failed to go up higher. This is actual divergence, and we should be aware that this is a bearish signal. Okay, so we have this kind of higher high, but it's being driven from lower volume, meaning that you're running out of momentum to that upside. Now, we do have a stochastic RSI that shows us with momentum shifting to the upside, so we still can potentially see a slight higher push here on BTC, but this to me just tells me that potentially we're running out here, and this is basically denial over what is potentially going to unfold next. So kind of keep that in mind. I'm not confident in thinking that there's a lot of room to the upside at this point, but I've been saying that all weekend, so that's nothing new. But there is potential here that we do move up into this yellow box. As I said before, right, on the hourly and 4 hourly charts, 21.5 to 21,700. That's the possibility if we want to be really bullish on the market. But this kind of data does not make me want to trade Bitcoin when we start seeing divergences like this. It would not be a good sign, in my opinion. Of course, that is all it is. Now, I think there's actually an indicator that does this for you. You can come in here. I think it's called divergence. Let me see if I can find it. Yeah, divergence indicator, this one here. And here you can kind of see a bearish divergence being flagged all over the place. And it happens time and time again, right? We can see it right in here. Although we're pushing up higher, we are still in this kind of bearish kind of stage. Now, if I scaled up into our daily chart, you had down here at the bottom on our daily, we had bullish divergence right in here. We set these lower lows while the volume was dropping. We got the reversal, right? So this is the opposite of what I'm seeing on a slightly bigger scale. Okay, so kind of keep this in mind that divergence can work for you, and sometimes it can work against you. Here's a bearish divergence. We can see here that volume basically was, let me find it. Yeah, decreasing during this time, or the RSI more specifically was actually increasing whilst the price action was not. And essentially what we see here is this bearish divergence, and we saw what happened with Pearl fell back down and so forth. Now, obviously FTX is a part of that. You can see the setups in there as much as you want as well. So just bear in mind, this indicator can be useful. Sometimes it can't be. It exists. I much prefer to try and draw it myself. Now, on our daily chart, we do end up with something rather similar as well. Right up here, we're pushing to potentially come up higher than this peak here in terms of price, or at least coming up equal to it. And of course, the volume profiles again are really, really low and not overly great. Now, that's just the volume side. We can see, did look at the relative strength index here. And again, we get a very similar picture. We are going down into these lower highs. And whilst that is happening, what are we doing? Well, we're coming up into higher highs on the RSI. So again, not giving us the kind of confidence that is needed to kind of think that, you know, that this is a strong run. We've got the bearish divergence here. And, you know, couple this with the DXY and everything that's going on there, we kind of know that this wasn't really driven from high profile in terms of volume. If we actually throw the volumes in here, you can see that, yes, on the shorter time frames, there's some FOMO activity going in here, and we do have an increase here. But this doesn't tell us too much if the price action is matching up with the volume that's going on. It's the differences between the volume and the profile of the price that is more interesting, specifically this, where we're unable to kind of gain that kind of upper, I guess, trumping the previous volume and the previous highs. If we can go up into higher highs on lower volume, that is not going to be giving us, you know, decent kind of outlook, in my opinion. So kind of keep those things in the back of our heads, essentially not looking great. Now, the other thing that's worth kind of noting here as we kind of get into this video is our weekly chart is now up in overbought. Okay, now we can be up here for a couple weeks. That's fine. Sometimes we don't even spend any time at all up in this higher area, and we just pull on down. Okay, so we can see this previously. Up here, we're up in this overbought area. We are now slightly higher than this previous high here in terms of the stochastic. The time before that, we were way up here as well, just before August of 2022. So, you know, we're taking a look at all of these kind of major peaks on our stochastic RSI, and actually, yeah, it's not giving us confidence either to be thinking that we're looking bullish here. We potentially might be actually thinking about this kind of move to the downside happening at some point real soon. So caution is kind of the message I want to kind of illustrate here. Now, if I come back to our daily, I do want to kind of illustrate that we are, of course, testing the 200 EMA. 200 EMA is usually and typically a good area to kind of be thinking whether or not we're going to be shifting trend. It's not the be all and end all, though it is just a glorified moving average, but a lot of traders will be trading against it. And so just kind of bear that in mind as well. That could also be a positive if we're able to push through it and confirm it as a good support area. At the moment, we are getting heavily rejected. Let me make this a little bit clearer. You can see the white line just in here. We're being rejected from our 200 EMA on the daily chart. Not a positive sign. So read into that as you will. And of course, we've been up in this overbought area since the 6th of January. We can stay up here for a bit longer. That's fine. But at some point, this will actually move down. On the weekly time frame, it's probably worth noting about the... let me find this one. Yeah, here we have the 250 EMAs looking to cross. I'm going to actually make the 50 EMA here. I'm going to make it red. I think red will be the right color for illustrating a bit of a death cross kind of scenario on the horizon here. So you can see these two lines coming together. So bear in mind that these will potentially now start pulling back and we'll see a death cross scenario. The death cross probably won't happen until price pulls back down anyway. So it only really represents what's already happened and all that kind of stuff. So just kind of bear that in mind again. Rejected from the 200 weekly EMA up here. Okay, that was back up in August of 2020, right? And you're seeing similar stuff on the daily chart. Just bear in mind, you know, these things they're here for reasons. And as much as I don't like the 200 EMA or the 50 EMA or just moving averages in general, I can't deny the fact that people will overreact to them. So you can see it time and time again. Be cautious when you start seeing these things, specifically when we're up in this overbought area as well. So ultimately, I'm not confident in the space looking bullish or anything like that. I do think it's been an artificial pump to the upside, as I illustrated over the weekend. From a small term update here, I'm not expecting terribly too much. On our hourly chart here, you can kind of see that we are just kind of floating around up here with an undecided market. We should push up before pulling down, but with so many long positions, it's not making sense that they're going to push up higher. You can already see all this white area here. All this white is liquidations that have already occurred. You can see up the top, this little green area at top here, just by a yellow line. This is the last major pool of liquidity. Other than that, it's way up there. And to the downside, there doesn't look like there's terribly too much here. But that's because I think most people are going long on the market and price will come down. As soon as we start going down, I think we're going to start seeing a lot more short positions open up, which will be the green areas. So bear in mind, I think price will go down to liquidate the longs. And you kind of see a little bit's happened already. There's a few extra ones in here. These are short positions that could create a bit of a buy into our yellow area, into our yellow box area that we spoke about earlier. But for the most part, I'm not that kind of confident on it. When we take a look at what kind of liquidity is available and where these are, that does look like a lot more liquidity to the higher side, but I'm not confident in thinking that that's the direction that it's going to go in just yet. I think a lot of the liquidations have already occurred. Some of these are at real good strategic locations as well, that if price does break out of all those structures and take that liquidity from those people who are shorting the market, then that's going to have a much bigger impact on Bitcoin overall. So I think the market makers of anything are likely to gravitate down, liquidate the people who have been going long, and look at all this stuff, juicy stuff down here around the 16k area, and potentially even lower. We'll see how it goes. And as we kind of climb up the chart, we also have a lot of really good juicy liquidity around some key areas around 32 or even $48,000 Bitcoin. There's a whole stack of liquidity up here, so it's all fair game, and it's just a case of what is going to break the actual structure. And essentially, I don't think the market makers or the whales and the institutional players who have been selling want to push the price up too high. I think they're just looking for creating a certain amount of FOMO to kind of trap out some long positions and all of those kind of good stuff. Now, the other thing that's worth noting here is if I throw in the order blocks, he says, if I can find them, let me come down into our hourly chart, because I think that's, there it is. This is what we're looking at this morning. Right up here in our yellow box area of our ABC structure, we can see 21,700 also falls right in line with a sell order block right in there. Okay, whereas the buy order blocks are way down here. Okay, so this is where like buyers are. and that's at 16k, and your sellers are right up here at 21,700. So yeah, it's not looking overly positive from order blocks, liquidity, the EMAs, the stochastic RSI, the RSI, the volume profiles. Yeah, for the most part, I'm not optimistic, but we'll see how it goes. I'm expecting price to go down because I think too many people are expecting the price to go up, and that's really where the money sits. The liquidity sits lower in the price charts than higher in the price charts. Not only that, we do have all the bearish divergence. We are overbought on the larger timeframes. Macro timeframes historically have a much better ratio of actually playing out than the smaller ones. So the smaller timeframes will see how it all kind of plays out, but my expectations are that we might have just finished short on our C wave move, and we may actually now be looking at turning the tides to the downside. But let me know your thoughts and opinions in the comments down below. Really interested to know. Other than that, I'll leave this video right there. If you found it useful, you know what to do, and I'll catch you in the next one.